Hello, everyone. Hello, hello. You should be able to hear my voice right now. Let me know if you can hear me. You can put a yes or a Y. Hey, Brent, good to see you. Thank you for joining me this afternoon. All right, awesome. Well, it's the first of the month again. The first of the month. We last did this February 1st, which was also a Wednesday after the market closed. And about 30 minutes ago, I also posted the link to that recording, which I will also do here after we finish up today's session. This is being recorded at the moment. I'll be able to package it up and send out the recording tomorrow. So if you're on the email list, you'll get the recording sent to you. If not, you may be able to check the website. It'll likely be posted there as well. And that February 1st meeting was pretty good with regards to identifying what the market was likely to do, some of the key levels to watch for various futures contracts that we covered. So I wanted to recover some of what we talked about last month and then show what transpired and then provide some forward guidance for the month of March. So first of all, for those of you that are not familiar with me, my name is Frank Ochoa. Also known as PivotBoss. I am the author of the book Secrets of a Pivot Boss. For those of you that are not familiar with my website, you can go to pivotboss.com. This is our member dashboard, but here's pivotboss.com right here. And there's a lot of great resources on here, a lot of great free content. There's also a resource here where you can check out my book, read more about my book. I have our premium membership, which is a fave among traders as well. It also includes our daily trading room in there as well. And then we have our Pivot Boss Masters, which is our premier trading education for traders and active investors. So we have a lot of great content here at the website. You can click and you can click the about us to learn a little bit more about me and what we do as well. Let's take a look here at the ES. So we're going to look at a few futures contracts here, some of the big ones like the ES, the 30-year bond, crude oil, gold, dollar. If you have anything you want me to check out, I shout it out and I'll be sure to look at it. I'm going to go kind of quickly this time around because we also have a lot of stocks to follow as well. So I found a lot of stocks here to take a look at. For today's session that could prove to be very nice here to begin the first couple of weeks of March and perhaps beyond. So we'll see how this plays out. So when we last left off was February 1st, and that was somewhere about right here, this day, maybe this day right here, and there it is, this day. So that's February 1st. And what I mentioned before was 2285 to 2287 was very, very important. And if the market could push above that level, back above that zone, you would likely see a move to 2314, which is about right here, and perhaps a continuation into 2342. So that was what the expectation was last month. I mentioned right now it was bearish because we were below that 85 to 87 zone. But if price were to push back above that area, you'd likely see a continuation into 2314 and 2342. The reason I chose those two targets was because if we bring up our Pivot Boss pivots for the month, actually those are for the week, so let's bring up for the month here. And then we will show all of the pivots going backwards. There we go. So here you can see as well, we got a big time push up. So here's 85, 87. Here's the rally. That right there is 2314. We had 30 here, and this thing continued to go up. And then there's the 100% expansion target right there. So this is the previous month's range right here, and if you go 100% expansion of that range, you get that target, and that's where it's at. So it was a full-on major expansion move up, a major continuation. What I've told the traders in our room is that we really have not seen any pullback at all. This is a unidirectional trending market. We've had a couple of periods here where we've had holding patterns, but for the most part, it continues to flow to the upside. And just today I was mentioning that a top like this can start to look like a blow-off top. I've mentioned before that this rally looks, it looks very different compared to the norm. It's outside of what we would normally associate with a trending type of market or a price discovery market. This is, bordering exuberance here, euphoria. This is significant. Today's range by itself was huge. If you look at the range, 260% of ADR. So price had been averaging 14.5 points per day. So if you look at this bar and 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 this bar, over the last 10 sessions, the market has averaged 14.5 points per day. Today we got a range of nearly 38 points and a 260+% of average daily range. That is significant. And what I mentioned to our traders is this looks unsustainable. It looks kind of crazy, but at the same time, you have to trade the auction at hand. And so from a day trading perspective, you still got to be focused on buying into weakness. All pullbacks are still buying opportunities. Short-term rotations at LVNs, rejections at the previous session's low, those types of things are springboards to higher prices. What we mentioned before was there were two major long-term targets, and we reached both of them today on the same day. So if I show all drawings here, and then I will take away the pivots for a moment. There we go. One range that I've been talking about a lot over the last 2 years, it seems, is this August 2015 range. That August 2015 range where it rallied, sold off, and gave us pivot highs and lows. Well, this is the target right there, 23.76.5. We just hit it today. That is the 100% expansion from that range. We just got it. Additionally, 2400, we reached a high today of 2401. We just got it. Both of those targets reached today. Major overextension here. We rallied from 2300 to 2400 in about, 24 days, 25 days? The fastest since 1999 in the YM, at least the Dow. So that's significant how much strength that is. The only thing you can say is you have to be careful. You just have to be careful up here. You have to continue to buy dips and pullbacks, but you have to proceed with caution because this right here is starting to get, I mentioned today in the room, this is the literal definition of vertical. I mean, it literally is vertical on the daily chart after being already strong and getting stronger and stronger still and then vertical. This is incredible. But now this may tend to look like a blow-off top. This may tend to look like some sort of rejection. And if you look at this minor little profile here, the way it's played out, 2300 is here. If we see a rejection of prices above 2400 here to begin the month, that could open up a nice pullback across the range to retrade 2300, which was ill-traded all the way through. This would be another opportunity for bulls to defend, and then now we have a price distribution that trades mainly between 23 and 24 as this thing establishes, more of a range. So that's a little bit of visualization looking forward for this one. In terms of how much higher can we go, I mean, we're stretching out already. The one thing I would do is start to add targets above this range. So that's what I'm looking for. Okay, so let me see one thing here. The upside target here was negative 150, so I'm going to add one here that says negative 175. And I'm also going to add one that says negative 2. I'm going to click OK. Alright, so those are the next upside targets. So if we had to stretch this one out, because this thing is blazing up, Well, this is the range to watch right here. And so we've just reached the 100% target. If we continue to blaze up, the next target above this is 24.44. And then up here, this would be the 150% expansion target from this range. That would be 25.13. 25.13. And I'm also going to put one more up here just to, because we don't really need this one down here anymore. So I'm going to bring this one from 75 and I'm going to make it negative 125. There we go. So I've basically used this impulse range. Oops. I basically use that impulse range back here, right there, to give us the extensions above the range. Because up here is uncharted territory. This is great. For those of you that are in the room, this is fantastic that you're here, because especially if you're novice, or especially even if you're advanced or have been doing this 30 plus years, this is a market unlike anything we've seen. And so this is special to adding to our knowledge base, our personal mental knowledge base of looking at the profile and seeing how this market is played out as it's continued to auction higher. How does the market respond to these levels? How will it backfill these prices? Because it has to at some point. It's not just going to continue higher. Obviously, we can continue to do this, but that just adds to the bigger pullback we may see, because we're starting to get to the point where it's getting very, very vertical. And at the very least, we got to find a holding pattern or a pullback high. And this may be nearing that point. Tomorrow, we might wake up in the morning and we might have went into 2420, rejected, and now we're back below 2400 before RTH. And all of a sudden, we have an absorption signature that might form. And from there, we'd be looking for a pushback. Baby steps first. Right? Back to the previous close. From there, maybe back to the midpoint of the previous month's range. That puts you into the LVN. That might be a spot to pick it back up. So that's my thought process right now with this one. With the recent rally today, with being 260+% of ADR, that's another thing. We had, I believe it was the YM with the highest ADR today at 300+% of ADR. It's been averaging 112 points per day, and today it was 400 or 350, something like that. 352 was the range for the day, and had been averaging 112. So that was a 300% of ADR day. That's huge. ES was 260% of ADR. Others were 160, 185, 200% for the ES, NQ, EMD. So those are all huge, huge days, and that tells you whenever you see that, whenever you see major days that are so much bigger than the average range over the last X amount of periods, those are usually major events to watch, because those could be topping points, those could be bottoming points. So it could also be points where it tells you, you know what, the volatility was X, now it's about to be Y. It's about to be bigger. So we could be looking at much more increased volatility here moving forward. So today was very important. And I'm going to be watching 2400 very closely. I'm going to see how the market responds. If there is any rejection, it could be a pullback zone. If we pull back to the right zones, again, it's buying season. So this thing is still trending up, but you got to proceed with caution. So that's the look at the ES right now from a higher time frame perspective. As we head into the rest of March, I still think it's bullish overall. The next, it's hurting for a pullback. It really is. And when you start to blow off top like this, that's when it starts to open up the door to that rubber band trade. When things stretch too far in one direction, you let go of one side, the rubber band snaps in the opposite direction. It's starting that stretch to one side, which could snap it the other way, at least short term. And even then, that pullback is still a buying opportunity. All right, let's take a look at ZB. 30-year bond here. This one was fantastic. The first trading day of February was somewhere about right here, I think. And what I mentioned at the time was bulls were absorbing off this pink line, which is 149.24, and they were looking to push price into 153.21. I also mentioned that it would be difficult to get to 151.11s, and it took its time. It came back and then eventually pushed through. And that 153.21 that we targeted last month, remember, this is February 1st, right? That's, what is it, this day right here. That's February 1st. We talk about this rejection day. We talk about this absorption signature. And I said, this is the zone where they're defending for a shot at reaching this pink level. And it hit that pink level, and that was the highest price it hit before it sold off and came right back. That 153.21 was significant, and it continues to be significant. So recently, over the last couple of weeks, you know that we targeted it again. So when price rejected here, we were looking for some sort of roll back toward that target. And all was well and good until we had the rollover gap down and the recent sell-off. But I mean, it got right to the zone from our zone. And now we're back at it again. So this has been an area we've been milking for a couple of rotations now, a few rotations. And it all started really from back here. Price was below the 149.12s, which is a key level. And then I mentioned if this thing starts to rally here, a pullback could be a buying opportunity for a push back to 153.21, and it got there. And so it all came about with these potentially trapped late market participants to the auction, and from there the squeeze ensued. And that set up the range. So I believe longer term, and I've made mention of this before, that this is setting up a larger absorption signature that will spark a major move to come. And so right now the bulls are trying to keep this area bid. You can see it right here. This is the previous month's low. The expectation is to reject these prices and look to return price back up to about 153. At some point, an expansion from this range above the buy stops above or the sell stops below will spark a major move. And this entire time it's been my belief that these bulls here would win out for a shot at running the stops through 154 and into 160 and perhaps as high as 163. So right now, that's kind of the idea at the moment. But we know that this is about markets. It's about the order flow. If this thing can't get up, stay above these recent lows, you're going to start to see a bunch of longs that were here tap out, and that could really put some pressure on recent lows. So this is still a support level to watch. I mentioned to our group today in the room that trading below the previous low there is what you want to see. Trading below 149.24 and into 149.12, that's what you want to see. Let it do that. And then if it fails to hold here and it starts to push back above this zone, that's when the squeeze starts. So there might be another day here where it tests even lower and pops back above. We'll see. We'll see what the exact signature looks like. But right now, this is the zone to watch for a pullback to 151.11. That would be the quick bounce, followed by the potential to see a further continuation up toward 153s, right? So that's the idea right now. But the previous month was right on top of it, and we got the squeeze. And there was a couple of squeezes off that same level, so that was pretty fantastic. The next one here is crude oil. Here's crude. With crude oil, now what I mentioned last month was right here. So this is the first trading day of the month. What I mentioned was obviously we have a very narrow range. I mentioned if price rallies into 55s or 55 half, look to sell it downward and sell it back to 50.70. And price got to about 51.22. So it was front run on both sides, from that idea. If it would come up, it could get rejected back down. So it was a smaller move than we thought, but that was basically the swing move. The overall idea to the analysis last month is still intact, which is we've got quite a tightly coiled range on our hands. It's building a ton of fuel and energy for that major phase of expansion. It hasn't quite done it yet, and it's been very frustrating from a swing trading perspective because there's not many opportunities. This was an opportunity, right, to kind of swing it back up. But there haven't been many swing opportunities. The intraday moves have been good on the days where the volatility and the pace and tempo are in play. Other times it's very poor. Like back here, it was very, very poor. And then only recently we saw the drop, then we saw the bounce. So right now we're still in the zone. We're 55, major resistance up here, 54, half 55. Major support still around 51s. And with all this trading up here in the upper edge of the range, as soon as it can't hold 52, it's going to be a quick dive into 51s again. And I still think this would be another great opportunity to pick it back up. I still think overall we could be headed higher. And I wanted to zoom out because there's really not a whole lot to talk about at this moment because it's still in this range. And anytime you're trading within range, trading around value, there's not a whole lot of edge there. So you have to wait for the edges. You have to wait for some sort of major move to an extreme. But while it's building out, you know that there's some significant energy being built up. What I mentioned before is kind of backing out of this view here. Let me hide these fibs here. Just breaking it down to the raw prices. Here's 39. Here's 55 half. Those are major LVNs in the price chart. Up here, 62, another major LVN in the price chart. Right here, that's an HVN, that's 59 half. Here's an HVN, that's 46.69. Those are the most important price levels on the chart from a higher time frame perspective. And when this thing was rejecting down here, we were looking for a move up. We knew if it got above this high, we could look for a push higher. We knew to defend it. We've been all about it. We knew about this low and holding on the pullback low. But all we've been waiting for is for some decisive action up here. Because from here, if you recall, for those of you that have been in the room for a while, some of you are new, 52 is where I've been mentioning that's where to sell it, sell it, sell it, sell it. Until the market can find acceptance above 52s, you got to sell it. And over the recent 2.5 months, prices traded 52 to 54 basically, and establishing micro composite value. And that's all you want to see, because now that tells you that the market has an ability to create or establish value above 52s, and that could then begin to lead to upward price discovery toward these upper targets. Now the only problem is there's a shelf life to this. At some point, if these bulls can't get paid through 55 half, if they don't get paid, the stops will come out, and this thing breaking through 52, 51s, 50 would open up a huge return, because that's a lot of energy. You're going to see a move, where it's like this. You're going to see a move drive like this. You're going to see something unwind. Or if this thing breaks to the upside, you might see something drive like this to the upside, right? As it gets to 62 in the other end. So this is still, the price range to watch. Still nothing sexy in here to really defend or execute in this zone at the moment. But if there's any failure to hold these 53s right now, that opens up a quick drop to these lows. I think still that's an opportunity to defend. And if they can't keep that area bid, it's a quick drop to 46.69. So that's some crude oil outlook there for you. All right, let's take a look now at GC. Now, GC was one where we got to our target precisely for the month of February. So in February, but it started with cautiousness. So if you recall here, this was right here, that is the first trading day of February. So that's where we were when we did the market outlook. And I mentioned if we break above 1220, be cautious at first. Because if there's any rejection of those prices, we might swing back down, and this would be an area to pick it back up, because ultimately I believe that we were going to 63s. I did mention if price was able to push above the 1220 and find acceptance, that's when you start to see this thing push higher and reach our 1263.20 target, which is MCVPOC. And so this was where we were right here on the close, about 1212s. And then there's the 1263s. So that's about a good 50 handles right there. You know, a good 50 handles of upside. After it was able to get above 1220 and establish, it just continued onward. That's exactly what you want to see again. You know, we never know if the market's going to play out according to your theory, right? The market can do any number of things because it's, you know, there's support here. But that support level will hold or it will break based on order flow, right? History has no bearing on whether that support level will hold right now. It's all based on order flow at that moment. But at least knowing the key levels to watch, that's half the battle. And we knew that if it could establish above 20, it would continue us on our pace towards 63s. If it could not maintain above 20, then it would likely come back down. Eventually it had a little bit of a struggle there and eventually pushed its way through and continued right to it. So now how much more do we have? Because we fulfilled many of our targets from all of these key ranges. So if I hide these key ranges for a moment, here you go. Here's the sell-off. That is the election day sell-off. So it rallied, found a high at 1340 and sold off hard. Down here, it found a low and it started a big-time uptrending market, a big-time markup phase all the way up. So as we know, many times when the market sells off, whenever it finds that point of rejection, it tends to retrace its move all the way back to the point of where it sold off. And the discussion we had in our trading room today is, where is that point? How much higher do we go? Is it this day? Is it this day? Is it this day? Which is the day? Right? Where are we trying to get back toward? And so this entire time, what I mentioned down here was if it can get above 1145 and hold, then we have a couple of targets. This one and this one were the most likely. If we can get those, then we could likely get to this one, right? It's kind of an order of operations thing. And this was a big target here. But where this thing really comes off the rails is up here, obviously, and right about here. That's still at least 1280. So on this recent pullback in gold, the short story is right now, we could be looking at a bounce into 1280 to begin the month. And perhaps a continuation back to the FOMC level from November 2nd. That's going to be 1306 half. Now that 1306, 1305 level was a major area in the charts. A CLVN, a composite low volume node, a lot of business there. That would be about where you could see this thing go to and completely fall back down. So right now, I believe that gold is still in a very, very bullish trending market. You know, with this one, it had to convince us early on. And after it started to, you know, follow our order of operation rules, this thing continued higher nicely. Now this pullback here, look at this. I mean, it's golden, right? I mean, it's exactly what you would want to see. You see the uptrending market. Look at this move down here. I told our traders today, 1233 was the zone, and as low as 1230. As long as it can hold that zone here, we might be headed back up toward 1280. So a nice rejection day tail today. Here's 1245s. That's the over-under that I told our traders today. If it can close above 1245s, that could be significant. So now tomorrow, watch 1244, 1245. If price pulls back to that zone, right, that could be an area for bulls to absorb for the next day or two as it attempts to walk its way higher and perhaps into that 1280 upside target. So that's a swing idea right now for gold as it continues to walk its way up. Overall, this thing has been very, very bullish. Every pullback has been a buying opportunity. So we'll see again. A pullback to 1245s will be a zone to defend for a continuation toward 1280. All right, let's take a look here at dollar. This was fantastic. This was great. I love the dollar here. Let's look at this thing from a monthly pivot perspective. There we go. Now with the dollar, what we were looking for the previous month, again, we nailed this one as well. What we were looking for, this is the first trading day of February, so that's the day we did the webinar. This is the previous month's low price. What I mentioned was watch for price to drop below that line and then look for a rejection to occur. Because if a rejection occurs, you'll likely get a quick move to 150, followed by a move into 102. It got to 102 today, hitting a high of 101.98 finally. But it got very close before. For all intents and purposes, that was a great high. That was 101.75. It came back to the midpoint, and that right there defined a key range for us. And now the market's playing off that key range. But that's what we were looking for. Again, I don't have a crystal ball. I'm not always right? But what makes what we do special at PivotBoss in our trading room with all of our education and training is at least we know what to look for. That's the main thing. We know what to look for. Coming right into that previous low, if we knew if it could reject, because 99.50 has been a key level for us. You see that? It says key level. That's our PivotBoss key level. It's been a very important level. And if it could reject these lows, we knew where this thing might be headed. Additionally, the way it rejects is very important. You can see down here, if I zoom in a little bit, that's a nice tail right there, and it closes near highs. That's a great, great bullish candle. And if you look off, I always say look off to the left, that's going to give you about where your support is. If you look off to the right, that's going to be about where your support will be. And then right there, the low of the day, the very next day, was the previous month's close price. And from there, it's never come back. It's gotten to a high of 101.98 today. All based off of identifying the right course of action, what to look for. That's what we call at our PivotBoss Masters, which is our premier training. I call that visualizing the trade. How can you trade something if you don't know what you're looking for? How can you find it if you don't know what they're looking for? We were looking for failed range expansion, and we were looking for this to happen. And if you can visualize it before it happens, then you can look to qualify it and quantify all the little scenarios around it as it's happening so that you can identify, yes, this is the rejection signature I need to look for. This is an ideal entry, whatever the case may be. But this was fantastic. The other thing I mentioned about dollar was that 102 was a hard sell. I think I said something, a quote along the lines of 102 would be a fabulous sell opportunity. I don't know. But today, this morning pre-market, I was a little more hesitant on it because this was a high, both were rejected hard. So to come through on this one, I mentioned let it test 102s and see what happens. If there's a rejection and if we close below 101.75, it could be a major short-term selling opportunity back against the range, somewhere between 101.45 and 101.60, right? And today it closed at 101.76. So that's one tick above this high, basically. So right now, while we got many things right here in terms of direction and what trades to look for in DX, right now we're at a crossroad. 102 is very important still, but we've had a lot of momentum to the upside. And so this has a look to it that if it could push through that 102, if it can establish above 101.75, that's why I was saying that's the over-under, that has some juice to rally this thing back toward 103s. That's what I mentioned today in the room. 103.02s would be that area. That's what I mentioned, I think, pre-market actually. The reason I like this range is because we got great range from here to here. You see it here to here, and you see it here to here. So there's a lot of great structure to it. And so generally speaking, when this thing sold off to here, I mentioned we want to bring it back up. If it comes back to here, you want to sell it. So if the market cannot, find acceptance above 102s, this could be a great sell. Not only back to the middle of 100 half, but all the way back to 99.50. That was the primary idea February 1st. Get it back to here, then smack it down to here. And so today it showed that it went into that level and got a first test fade. I do not think this is a rejection day just yet, but it could result in that, but it could also result in a continuation. That's why I said it's right on the cusp. So we got to watch to see how this plays out. But 102, look at the ledge here. Significant ledge. there's going to be a ton of sellers there that already are looking to reject. This is also the top of a key range, so if it rejects yet again, at the very least, 150 right down here. So this is something to watch out for in DX. All right, I'm going to jump over to stocks right now. There was a few stocks last month that worked out really, really well for us, a few that did nothing, and a couple that went against us. Here was a couple that went really, really well. We found this stock right here on this day, and this was prior highs. Right here was a 3-day hold above it. When it failed, this was a rejection day. I mentioned that that is usually a selling opportunity for a move into the prior lows. Prior lows being right here, and we reference that $9 level. Look at $9 on the button down here. So that was a great trade that took all month long. Again, it was based off this rejection tail. That was the first trading day of February. These participants got above these highs, and then they failed to stay above the highs. So this was the shakeout leg. This is the retest entry, and then you work your way down. Additionally, there was other opportunities to absorb here as this thing pushed right to the opposite edge. So that one worked out nice. We also had this one where here was the one that I mentioned was the best of the ones we had looked at. I said this one has the best odds of the ones we've looked at of reaching its target. We found it on this day right here. That's February 1st. Or is that February 1st? Yes, it sure is. So that's February 1st right here. I found this with our lower value with the change of bias scan, so it's lower value here, but the close is above the pink range, which tells you that you could be looking at a change of trend coming up. The trend had been down. Because of that scenario there, I thought that this could happen. So there's the first of the trading month right there. I mentioned that bulls want to look to defend 48s for a shot at 55, sorry, and the previous high here. So 54 to 55 right there, that's the previous high. And there it is. I mean, that's the first trading day right there. Those 2 days it hit 48s, never went against it, and went right into 54, 55. That was the best scenario we had last time we did this, and it worked out great. Once it got to 55 up here the edge, obviously some profit taken came in, and then you've seen a pullback here. But that was very nice. We also had another one, TWLO, and this was the same idea. It had been trending down. It formed a lower value with a change of bias scenario, and this was the first trading day right there, the month. I mentioned in this scenario that this one likely rallies back to 35s. And so here's the move, and that's 35s right there. 35. So it got to 35, and then it pulls back. So we had some that did pretty well. Again, some of them, most of them did okay. Obviously, this is a unidirectional market right now, so you have to be very careful. But I got a lot of great candidates right now I wanted to share with you. I'm going to go through them a little quickly right now. We have an uptrending market, so I will start with some of the uptrending moves here. This one right here is TEAM, and this one is a PIMA method. Change of bias occurred, so this one was trending downward, pushed through, hold, and now it's in the trigger zone holding again. Nice rejection tail right here. This one been trending up. This one has an opportunity. Again, the goal, anytime you're buying a pullback within a trending market, the goal is always just a new high within the trend. Unless you have something you're playing to like value or perhaps an ADR target. So if I come over here and bring up ADR targets, let's pull up the new monthly targets. So we're going to go monthly bull targets here since we're looking at upside candidates based on the low of the day. And again, we don't know if this is going to be the low of the month, but this is a great rejection tail for March 1st. We can say, okay, that's the low of the month. This right here would be our primary upside target for the month, 31.39. This is your scaling target, and this is your 100% target. So based on average daily range, or average monthly range in this case, the month, average monthly range over the last 10 months, based on this low you would hit this target on an average month over the last 10 months. That's 32.43. So this one still has some legs. Obviously has a lot of legs to get up there. It's at a great trending personality. So if it can push through these 2-day highs at 29s, we could be looking at a move up. High priority target would be 31.39. That's TEAM. DLB. This one had a tendency to look like it was going to squeeze. This one was more based off of a PIMA, where it was downtrending, popped up, and held. So this one looks like it has the appearance here, 50, that it could squeeze up, but it's not as strong as some of the others. I was looking to see how it was going to finish here. This one looks like it could go a little bit higher. The upside target for the month would be 52.37 if it were to catch some steam to the upside. But there's other better candidates here. This is DEA or DEM, and there's a lot that look like this right now. So I'm going to look at the PIMA method here because there's a lot of markets that look like this, where they're funds or ETFs. You have a stacked and sloped environment. You see these moving averages? They're stacked on top of each other. They're sloped higher at a 45-degree angle. So when price pushes into this zone right here between the first and second moving averages, that's what I call the trigger zone. The trigger zone right there. That's where when price pushes into that area, you want to be looking for signs of rejection to defend and push this thing higher another leg. So right now it's coming in off of 40. It's bouncing. It's come out of that area. So we could be looking again at another push higher. That would put things, you know what I'm going to do? I'm going to add. Let's add a study here. And I'm going to add ADR targets. So based off of the current session's low, the primary upside target would be 42.04 for the month. That's given if price can continue to hold 40. Right, you'd be looking at a push into 42s, perhaps more. Let's look at BGCP. You see, this is another one that's very similar to the one we just saw. This PIMA method shows a very strong unidirectional trending market. You can see very bullish, right? Every time it pops into this zone, that's an area to defend, right? And it just did it again. So when you're in a trending market, the idea is to time the entries back toward the trigger zone, look for signs of rejection. This right here would be signs of rejection, where price pulls back into the trigger zone, and then by the time the day is over, it's back above with a tail, right? That's a great sign that this thing's going higher. And then this one too, look, it gaps down, gaps back up, and now it's starting to run away again. So based off of the current low there, we could be looking at more strength toward 12.16 and as high as 12.39 on an average month basis. Here's MNOV. MNOV right here. If we look at this with the monthly pivots, here we go. This is a very nice one right here where we've seen some rejection off these lows. This is a higher value right here. Actually, let me drop this down so you don't see so much. There we go. So once you get down here, you can see that there's been a lot of support in this chart. So down here, a lot of support. Boom, boom, boom. Recently, price held at the bottom end of this trading range. The top end of the range is up here, 775. Recently, price held down here throughout the year. The market's running off like crazy, and this thing is sitting down here on lows, forming an inverted head and shoulder, an absorption signature, and just recently, we saw a breakout from this range. Today was the retest leg. This type of behavior would tend to forecast a major push to the top end of the range. So this is MNOV. Again, we have major support here. I'm going to draw the support level right here. I hadn't done it quite yet. Let's write that as a key level. And 565 is the bottom end of the range. We can just duplicate this one real quick and drag it up here and call the top of the range 775. So there it is. And we're good to go. So this is an absorption signature down here, a long-term absorption pattern. This is what you would call accumulation typically, where it's down here accumulating, accumulating. Now you're starting to get expansion. Boom, you get a burst up. The first retest needs to be defended. If they can keep the 620s bid here, 630 bid, that would imply a continuation across the range towards 775. I know this is a cheapy type of stock here, but this looks pretty decent in terms of what the chart looks like, the amount of fuel that could, push this thing to the upside. This all looks pretty good. So this is a good stock here to keep in mind. The next one here is CLNS. CLNS, we have these lows here. This is the previous month's low. That's 1380. A major rejection tail today. So price, we have the earnings here, and then price comes down. Major rejection tail back up, and now we're closing back above these lows and back above that low right there. That's also where the midpoint of today's range is. So this one is one you have to be careful about, but I love rejection. So here's rejection of these two lows. Here's rejection of that previous month's low. We have a major 1325 LVN, so it got to the top end of that LVN and rejected hard. So all signs point to this being rejection, and now you may see price rally to the opposite end of the range to find rejection on the other end. So a pullback toward 1380 could be a buying opportunity for a continuation toward 1480, and perhaps a shot into the next HV and above, which could be as high as 1525 to 1540. So just a short-term opportunity to watch out for here, but based off the rejections on this lower end of the range, more upside could be seen on a short-term basis. All right, here's Vale. V-A-L-E. ADR, this one's trending up. You can see the trend, just very nice, orderly trend. We're at the bottom end of the range. You can see here, this was actually a higher value, I believe, with a change of bias. So it closed below the higher value relationship, but then gapped against that range. So when it does that, that's usually a rejection of that change of bias, and instead fuels a continuation of the dominant trend. So right now we're in the dominant trend. We've just got a counter trend pullback. This could be an opportunity to retest highs at the very least toward 1175 and perhaps extend the range a little bit higher. But just something to watch out for. 1025, got to keep that area intact for a squeeze much higher. Here's THC. THC right here, this one had, you can see this key range that I marked off over here, 2413 down to a low of 1703. The midpoint's right here at 58, so 2058. Price held down here and eventually squeezed back above the bottom of the range, came back to it, held it, rallied, was on its way up. Obviously, earnings can do this to a chart, so you got a big gap down on earnings, and look at this huge tail that's left behind. Major tail in an uptrending market. I definitely think this is one to watch because anytime you have this type of up move, here's the accumulation phase. It's a markup phase right now. And so when you get this type of pullback, the tendency is to swing back toward value. And so right now, defending about 1880 or so, or wherever that support, higher support starts to form, could be an opportunity to squeeze it back toward value on a composite basis. Right now, that's 2153. This is one that I offered to our room a couple of sessions ago. Based off this rejection tail here and these lows, the expectation was that we would climb toward 1380 to 14s. And so far, they're continuing to absorb off 1220. So that's the absorption point here. Failure to hold 1220 will start to auction downward. So right now, got to stay above 1220 or reject that area for a continuation higher. So that's a short-term buy op right there. And then this is another one that I gave to our room here a couple of days ago. This is FCX. FCX right here. This one has 13s as a major area of support. We had a couple of days down here, 3 days, where it formed highs, and then we gapped above it, and the retest of those highs were defended. And what I mentioned before, if we can see a rejection signature here, you could start to easily walk back up the top of the range, back to the midpoint of the range, which is 15s. It's the midpoint of the previous range here. And a shot to continue toward the top end of the range. In the room, based off average daily range over the monthly basis, it would take about a month to get to the opposite side of the range. So those are a few buy-side candidates. I know we're kind of going over time here. For those of you that want to stick around longer, I still have some sell-side candidates that we can cover as well. Flipping through a few of these here to see how they finished up, because not all candidates are created equal in this uptrending market. This was a sell candidate of ours a couple of days ago. Obviously, this was due on earnings here, but after we got that big push up and then we got that rejection day tail, I mentioned to our group that this was a sell opportunity, likely back to this yellow line, which is 24.40 basically. And then, of course, yesterday morning it gaps open below that level and just runs to this low. Today we're trading and backfilling, but just a big time push. But that was a great sell candidate from a few days ago. We also have FOXA. This one's interesting because we're at the top end of a major range. So if you look back here, look at this key level. That's 31s. Boom, 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 each time down to the lows. The bottom end of the range is way down here, 2270. Look at that LVN. And every time it hits it, bow, bow, right? Bow. So right now, with that 31 key level, very strong level, area of resistance. What we're looking for here is how does price respond after dropping back below it. Here's 31s. The market tried to be valiant. Bulls said, hey, I'm going to keep it up here. I'm going to try and push it higher. And they failed on this day. And when they failed, they drove lower. And now pulling back, they're making 3080 resistance. This is an absorption signature. For those of you that were part of my webinars here recently with regards to the absorption signature, you know that this is one of the most powerful patterns out there. This is the way that the market creates tops, creates bottoms. This is the way that they trap counterparts and then look to run the stops. This is where they find the best entry points. And right now, 3080 is where bears are defending, trying to keep 31s offered. And if that's the case, this could be a quick drop back down across the range. So at the moment, this could be a great selling opportunity short term. Again, 3080 is very important. As soon as it pops back above 3080, 31, it's done. Done deal. So it's a short-term opportunity. If it can continue to hold and reject, below 2950 is where the stops would come out, and that would open up a move back to 2768. So that would be the move to look for here if bears continue to have their way with 31s. This is quad graphics. This one is a fantastic trading range. Again, you have to keep in mind we've been in a super bullish market. So if you're going to counter trend trade this thing, you have to be very cautious. You have to know how to enter these markets the right and appropriate way. We have many techniques that we use at PivotBoss. Scaling techniques that we use, a lot of different types of trade management techniques, entry techniques that we're looking for, generally speaking. And those, if the market doesn't set up with those ideas in mind, then we move on to the next one, right? So in this case, when we're counter trend trading, when the primary market is up, you've got to be very careful. You got to be able to get to a quick T1 so you can scale half of that trade and get to a break-even proposition quickly, mitigate that risk ahead of time. Right now, You're seeing a rejection off 28.50s in this market. The bottom end of the range is 24s. It's been a great trading range. Right now we're rejecting off the highs. That's the previous month's high being rejected. Great tail into 28.5. So I'd be looking for a pullback into 28s in the next session or so for a shot at selling this thing back down. The quick target might be at about 25.50, which is near the midpoint of the previous month's range, with a shot to see a move across the range over time. So this is another selling candidate here with a great range. This is KT, very similar here, 1640. You see how market participants are above it. They failed to hold it, and they kept it resistance, and boom. We came back to that level and got major selling pressure yet again. Anytime that happens after a big rally, I wouldn't be looking for a complete sell-off back to support, but I would look for a retracement back toward perhaps a midpoint or something of the sort. So this is the midpoint of the previous month's range. It's about 1535. That would be an opportunity to swing it back toward about 1535. This one's a big rejection tail as well. The bigger they get in terms of range, this was a 6% gain here, and that doesn't even include the outer edge of the range on how far it got. So that was a big time move here. In terms of ADR, rejected off of 54.30 here. So to me, that opens the door to pulling back toward recent support, which is about 46s. So that would be something to shoot for. Perhaps a fill of the gap back toward 48.26, and then a continuation as low as 46s. So this one again, we'll see. You might see a day or two or three where it trades in this little range here. And as soon as it fails to hold 50, you might be dropping right back to 46 very quickly. All right, I think that pretty much does it with those sell candidates. For those of you that have not seen a test drive of our premium dashboard, it's only $19.95 and $19.95, so under 20 bucks to give it a try. 2-week trial. It gives you access to all of our dashboard contents in addition to our trading room. So here you can see we have a lot of different buttons here where you can get to the things you need to get to. On-demand training would pop you right down to our 10-part executive training series. And from there, you're able to get right into our methodology, right into our training, learn about what we're looking for and why, and learn the setups that we look for in the markets. We have our signature setup series that is right here as well. The absorption signature is #1 with more that follow. A lot of great content at the dashboard for you to really learn from. And then again, the trading room. It's part of the trading room to come right into the trading room and be a part of what we're doing. Sometimes the market volatility is low, so we're just sitting there looking for opportunities. And sometimes the getting's good, and that's when the pace and tempo determines more activity into the market. So it kind of go with the pace of the market, and we're typically right on the right side of things. If you go to PivotBoss.com, you can learn more about my book, Secrets of a Pivot Boss. If you don't own this book, it's going to be one of the best books that you'll find on the subject matter or in trading in general, in terms of giving you a foundational approach that you can use and implement in your trading, kind of a framework for how you should start looking at the market. And from there, being a part of what we do here on a daily basis only enhances that knowledge. You go to Pivot Boss Premium right here, and that's going to tell you more about our trial. And so you can go and get a 2-week trial offer, only $19.95. If you like what you see, which hopefully you do, it's only 99 bucks a month after that. So being a premium member with all of the various tools we get, yes, absolutely. So Scott, if you do join, you do get those pivots for Thinkorswim. You get everything that you saw in Thinkorswim today. I have style templates that you'll have that information immediately. So this is how we get up and going very quickly. We have all the resources at our dashboard. Our members are able to get up and going. We jump into our trading room every morning between 8 and 11 Central. and then we get to work, and it's a lot of fun in there. So this is, again, only $19.95 for the first 2 weeks. After that, it's $99 per month. And for those of you who really want some fantastic, phenomenal training, you're not going to beat a better deal than what we have at Masters. You can go to PivotBossMasters.com, learn more. You can join, go to the join page and learn more. We have core training, proprietary training. We have various modules that we've recorded here over the last year plus. We recently did a 6-week training program for our traders, and we'll be having another one coming up soon as well. This is fantastic. You get so much with our Masters content, and it's only $995. So it's this is a fantastic lifetime membership where you buy in, you get all the content, and then anytime we add new content or we host live sessions, you're a part of that content already. No extra fee because you're a lifetime member. So this is definitely one of the best trading educational sites that you'll come across, because you pay once and you continue to get education from that one-time fee. So it's constantly paying you back. So PivotBossMasters.com for that one. PivotBoss.com if you want to be a part of the room or buy the book. And again, as always, it's always my pleasure. So thank you so much for coming out and being a part of our monthly Market Outlook webinar. We had some great candidates and some great moves that came out of the February Outlook webinar. We'll see what happens here in March. As always, thank you so much for being a part of our session here this afternoon. And I look forward to seeing you soon. Take care, everyone, and I'll talk to you later.